Hey everybody, today is July 11th, 2023, and today we're going to talk about the price of Bitcoin and whether or not I believe we can hold 30,000 and go up to perhaps even 45 or 50,000 this year. And before we begin, please read the disclaimer. You can pause this video as you read it. Hey, first of all, I want to say that apologize for not making a video last week. It was 4th of July weekend. I had friends and family over, and they stayed a lot longer than I expected. So, I had to spend time to entertain them, and yeah, hopefully we'll get back to a more consistent schedule. So where we left off last time was we were basically in this downtrend, right? And then we suddenly got the news from BlackRock that they were applying for an ETF for a spot Bitcoin position ETF, right? Versus the futures-based ETFs that we have now. And that's a big deal because we don't have a spot-based ETF in the US, right? There's one in Canada, but not in the US. And also there was a new exchange that opened that was for institutions, and that had Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. And that was a big deal because that suggests that there's a lot of demand for institutions to come in, right? And that one's backed by big players like Fidelity, Charles Schwab. So that was a major catalyst for the reason why Bitcoin just ripped up, right? After being in basically a downtrend for the last few months, right? We just ripped up in like a couple days, right? And now we're holding 30,000 or above this Fibonacci level, right? And this is very important. I even talked about this. 30,000 is a key level to hold in my last post, right? Even going back, I just want to say that I was looking for 25,000 for a while, right? You can see I was looking for 25 all the way back to May, right? All the way back till May, I was looking for 25,000, and then it finally hit. On June 15th, it fell below 200 week and it hit into my target 25. It finally hit, yeah, here. So between June 15th and June 22nd, it hit the 25K level. Yeah, I think I missed. Yeah, between anyways a post. But anyways, yeah, it finally hit my target level of 25 and it ripped up higher. So I talked about in my last video, I had several bids down here, not only for the spot but also for miners. So yeah, those filled, and I was super happy because this thing ripped up really quickly. And if I didn't have those bids in there, I don't know if I had time to fill them, right, or to get them. I would have to buy at a higher price. But anyways, right now, I'm leaning definitely more bullish now, and I just wanted to talk about in the bigger picture. Well, I guess I could talk about the micro term before the macro term, right? So in the short term, obviously we want to hold 30,000. I said this in my last post. By the way, if you're not following me on Twitter, please follow me, EddieLux_. So my last post on June 29th, I said 30K is a key level hold, right? And the reason why is that there's a lot of confluence of support levels, right? Obviously, you have the Fibonacci line, support line here, right? Which was once resistance. We tried to break through here, rejected, spent a couple of weeks in downtrend, but now we're up. And we're trying to hold this level now. So we have to hold this level as a Fibonacci support level. But also, as you can see, let me just get a clean chart. As you can see, 30,000 was a major level of support in our last bull market, right? We held here in early 2021, held here during the China Exodus crash, and then we finally got rejected in 2022 bear market, and we just plunged all the way down to 15,000, right? And now we're coming up here. Not only did we manage to fall below the 200, and we also managed to fall below the 200-week moving average, which historically has been a strong support level. See how during the previous bear markets we held the 200-week moving average? Well, we finally broke below, and this is the longest we ever spent under the 200-week moving average. But finally, we came back above. And I think part of the reason why we spent the last couple months trailing down to 25,000 was that I think the market wanted to retest the 200-week. It finally hit that level and it ripped up higher. So I think that is confirmation that the market is bullish, leaning bullish, and the monthly chart is also looking pretty good. And I talked about this in a previous video, like two or 3 months ago, where I initially thought that we would get price action that was similar to the Echo rally in 2019, but we just had this massive rally up and then we went sideways for the next year and a half, right? And I thought that was true here until we started to move sideways down here. So a couple of videos ago, like 2 months ago, I talked about how I think this time's bull market is going to look a lot like what we saw in 2016, 2017, where we have a much more sustainable rise. But the way it's going to look is more like an impulse move sideways, and it gets more and more parabolic, right? I think that we're more likely to see that than what we saw last time, where it was like a sprint higher. Where it was a sprint higher and then sideways and then a sprint higher, right? To a double top and then a crash. So I think that this time we are going to take our time and really just move in. And I think this is a good indication of the market maturing, right? Instead of just having these huge volatility events, like we might just see a much, and that's not to say Bitcoin isn't volatile or anything like that, but we might see a much more, sustainable rally. And that's going to be better because we might see a higher peak than last time, right? Where we just sprinted higher and we basically just double topped over here, right? We might see a nice parabolic run next time, perhaps. So the question, is it possible we might see 50,000, right? Which is pretty much, it's a little higher over here. I think it's definitely possible. I mean, the year ends over here. If we do get like a nice impulse move up higher, we can get 50,000 and reject it here. And if you look, we switch to Fibonacci chart. 50,000 is just right on this Fibonacci resistance level. So if we're able to hold this level as this Fibonacci level at 30,000 as support, right? Remember, we had support here, and we had support here, and then we failed to hold over here. We broke support, and we flipped it to resistance, which was confirmed over here recently this year. We tried to break through, and we failed. So we're going to try again one more time to hold this level. If we're able to hold this level, the next resistance level is just below 50,000 right here. So it is possible that into the remainder of the year, we might try to rip up higher, right? So that's exciting. Bitcoin possibly could go to 50,000, perhaps, right? Around here, we might peek our head above and then pull back down. I don't know. But keep in mind, right? Here we're also seeing another resistance level, right? This gold line, which is the 100-week moving average, right? Right there at 32,000. So of course, there's a lot of resistance levels: the Fibonacci, the gold line, and also the fact that 30,000 is historically been a strong resistance level, right? So now that we talked about the technicals, let's look at some of the sentiment, right? 57. So even though Bitcoin is looking more bullish now that we had this nice rally, it's not necessarily in extreme greed, meaning that it is possible that we can have another impulse move higher without it being too overbought, right? Look at the RSI. RSI at 60, right? It's not necessarily overbought yet. Whereas earlier this year, when we had that big rally from the January low, December lows, right? We became a lot more overbought now. So oscillators in neutral zone is still, not necessarily bearish. So let's look at the hash rate. Hash rate is getting closer to all-time highs again, right? We kind of peaked earlier this year in June, and we kind of had a pullback, but things are recovering, and the higher it goes, usually Bitcoin price follows as well, right? So let's look at other charts. So I like the 2-year multiplier chart because it gives you a really easy way to see whether things are overbought or oversold, right? If it's below the green line and becomes shaded green, that's generally a good time historically to buy. And if you look at this chart, you'll see that this is the longest time we've ever been in this oversold zone, right? Where sorry, just need to adjust something. So anyways, this is a long time we've been over in this oversold zone where it's generally been a good time to buy, right? And usually this doesn't. Last time we didn't have it a long time, but like I said, like earlier in this video, I talked about how I think this market cycle is going to look a lot more like 2016, 2017, right? And you can see right here, the time to accumulate looks a lot like the cycle we had from 2015 all the way to 2017, right? Where we spent a lot of time below this green line. So right now, we're getting close to the exit. We're getting close. Once it goes above this green line, historically, it doesn't stay below. It doesn't go below anymore, right? It just continues to go up higher. So this could possibly be a good time to accumulate. And I've been looking at this chart and, using it as a way to sort of, I guess, another way to justify buying more, accumulating more under this level. Of course, this is not financial advice. You gotta do your own due diligence. This is just what I'm doing. You don't necessarily have to copy me. I have a higher risk tolerance. Bitcoin and cryptocurrency is very volatile. So do your own research and make your own decisions, right? Now let's look at, I seem to have copied the same chart. Okay, golden ratio multiplier. Oops. So the golden ratio multiplier is, again, looking a lot similar to what we saw in 2016. Instead of last cycle where we at least ripped up really quickly and got into the higher bands, right? And this time we're looking a lot more like 2016-17, where we're gonna go slowly higher and higher into each band, right? We take our time, impulse moves up to the next level, and then a pullback, right? Green band, red band, and then purple band, right? So right now we haven't touched the green band yet. So it could mean that we're sort of like in where we were in late November 2015, right? where we just had this impulse move higher into the gold zone, and then but we still haven't hit the green band. So we could be somewhere down here, the equivalent of this cycle, right? Again, and 200-week moving average, another chart that we can look at. Of course, we talked about how this is the first time in Bitcoin's history where we spent a significant amount of time below the 200-week, right? But again, if we do have a long sustained bull market like we saw in 2016 to 2017, that could actually lead us to a higher peak than we saw in our last bull market that peaked in 2021, right? So again, these are just my own opinions based on these charts, and there's definitely a lot of things we can discuss looking forward to see how information changes, right? Like later tomorrow, there's going to be CPI report, and we know how the stock market affects Bitcoin, price of Bitcoin, right? Especially Bitcoin, it follows the tech stocks like the Nasdaq a lot. So if the CPI is higher than expected, then the stock market could possibly pull back, right? If the market anticipates that the Fed might continue to raise rate because inflation is going up again, that could put downward pressure on Bitcoin and other risk-on assets, right? But if inflation tomorrow is cooler than expected, then we could probably expect Bitcoin to rip up higher along with the stock market, right? Another thing to look at is the dollar index. The dollar index is usually, Bitcoin usually moves inversely proportional with the dollar index, right? So the dollar index is rising, Bitcoin usually falls, right? And we can prove this by looking at this chart, right? The dollar had a strong rally from the base of 2021. As the Fed started to tighten and to raise interest rates to fight inflation, the dollar got stronger, right? Because they're taking dollars out of circulation, and that put downward pressure on Bitcoin, right? Because people don't necessarily want to hold Bitcoin when it's going down, when they could just put it in, a bond, or even just a CD or your savings account when interest rates are rising, right? And you have safer, guaranteed returns. But now we're starting to see the dollar pull back down, and since then we saw Bitcoin rally, right? And now it looks like the dollar is starting to look like it's forming perhaps a descending triangle, which is bearish. If it continues to go down to resistance, and we talked about in this video, the more times the price tests resistance or support, the more likely it is to break through. So if we come down one more time, it's possible we can plunge down to this next level, which is just below 100, right? And again, 100 is a strong psychological number, and it's also where the 200-week is, right? At 98, just basically below 100. So if we see this thing come down, that can give Bitcoin a lot more room to run up higher, perhaps to our $50,000 zone or the next Fibonacci resistance level, right? So anyways, just to summarize, I'm a lot more bullish on Bitcoin, especially since we have those narratives out, the bullish narratives out regarding the potential approval of the first spot ETF from BlackRock in the US, also the exchange for institutions, and just overall positive sentiment and recovery in the stock market, pulling Bitcoin and other risk-on assets up, right? But again, like my Twitter post, 30K is a key level to hold. I still believe that we still need to hold 30K. We need to hold and defend this Fibonacci level, right, at 30,000. We're able to do that. We can see, and I can see another leg higher, and eventually to what I believe we can hit is 50,000 later this year if we continue to hold 30,000, and if the stock market continues to recover and inflation continues to go down, and the Fed continues perhaps to pause or even cut rates. Again, I don't believe they're going to cut rates until 2024, but that's just me. Yeah, so of course we need to talk about some of the risk factors. Of course, the SEC is still going after the big exchanges like Coinbase and Binance, right? And that's still ongoing. So any further developments in that could shock the market to the downside if there's any like really bad news or whatever. So that's just something to keep an eye on. I'm cautiously optimistic right now. I'm a lot more bullish than I am bearish. Actually, I'm very bullish from the side, but you gotta anticipate pullbacks, right? But don't be like stupidly bullish, right? There's going to be risk. There's always risk, especially in a volatile asset class like crypto, right? And the SEC is not like, that's a big deal, right? So especially going after the two biggest exchanges. So keep your eyes and ears open for any updates regarding the SEC lawsuits, okay? And for now, I remain cautiously optimistic. As long as we hold 30,000. If we break below 30,000, then of course we're gonna have to come back and reassess. We do have support levels around 28,000 here. These moving averages could see us come down here. But generally, when we see us have such a strong rally, right? Just like we saw here, and just like we saw here, we don't want these pullbacks to be big, right? This was during the regional bank crisis, so this was sort of like an exception, but these pullbacks have generally found support on previous resistance, right? We felt previous resistance levels, strong support, and it bounced off, right? We didn't even touch the 200-day moving average this time, only on Ethereum, right? So we don't want a pullback to be massive. We don't want this to pull back all the way down here because that's very bearish. That's probably going to go down lower. So any pullback, we want the moving averages to act as strong support, right, down here. But ideally, we hold this Fibonacci level, right? Look at all these pullbacks. We've been absorbed by the market, right? All these pullbacks that we've had over the last couple sessions, absorbed, right? So far, the Fibonacci support level is acting as strong support. But again, we need to see what happens going forward. And of course, we have a catalyst event tomorrow with the CPI. I'll definitely update you on Thursday with a chart. And please subscribe, or sorry, follow on Twitter, EddieLux_, to get the chart update on Thursday. And I'll try to be more consistent with videos. Hopefully there's no more holidays in the future that's going to keep me busy. Yeah, so I'll try my best to keep consistent and dedicated to the upload schedules. And we'll definitely update you on the price of Bitcoin and the stock market going forward. Thank you for watching the video. If you found it helpful, useful, informative, please like this video, leave a comment below, and subscribe for updates. Appreciate all your support. Thank you again, and have a great day.